Many San Diego homeowners are waiting for mortgage rates to come down before they list. But what if waiting ends up costing you more than it saves? Here's what's at stake. While you wait, your equity sits frozen in a house instead of working for you, and every month you keep paying to own a home you've already decided to sell. The rate you're hoping for might trim a future buyer's payment by a little. It won't hand you back a year of those payments or the ground you lose as the summer market fills with new listings. I'm Ray Stendall with Stendall Realty Group. I read this market through the local data that moves every 2 weeks, the numbers that tell you what your move is actually worth. Here's what the June 9th reports on housing shows. Start with rates. As of that June 9th report, rates sit at 6.68% per Mortgage News Daily. Stephen Thomas calls rates the gas pedal for housing. Below 6.5%, buyers press down and the market speeds up. Above it, affordability tightens and demand cools. So a lower rate does bring buyers back. Here's the part the headlines miss. It doesn't automatically raise the value of your home, because that same lower rate pulls more sellers off the sidelines and puts more homes up against yours. Will rates drop? Maybe. But the June 9th report doesn't expect demand to break higher as long as rates hold between 6.5 and 7%. Betting your sale on a drop is betting on a guess. Look at where the market sits today. Demand across San Diego County is running at 1,976 pending sales, about 7% above a year ago. Inventory sits at 5,699 homes, roughly 6% below last year. That's the first time since January 2024 that supply has trailed the prior year, and the expected market time is 87 days. Steady demand against tighter supply favors the seller who moves now. The market's only half the equation. The other half is what waiting actually costs you. Every month you hold, you carry property taxes, insurance, and the maintenance you keep pushing off. Add the opportunity cost of equity sitting idle. And the figure that actually counts is your net at closing after taxes, fees, and carrying costs come out. A slightly higher sale price next year can get eaten by a year of those costs and a more crowded market. Here's the competition piece. When rates fall, buyers come back, and so do sellers. Through May, 5,224 owners pulled their homes off the market, 11% more than last year, many after refusing to drop to a price buyers would meet. They don't disappear. They relist. Inventory is already climbing toward a summer peak between July and August. More homes against yours means more choices for buyers, more negotiating power on their side, and less on yours. A few assumptions are worth correcting. Waiting does not guarantee a higher price. Those 5,224 who delisted are proof the market won't pay for wishful pricing. A national headline about rates isn't your market either. San Diego County runs on its own demand, its own inventory, its own market time, and timing matters far less than pricing. With a sales-to-list ratio at 100% and 99% of April closings coming from sellers with equity, the homes that sell are the ones priced to the local data in any rate environment. So here's my advice. Don't sell to a headline and don't wait on one either. Every homeowner's situation is different. Your equity, your neighborhood's market time, your monthly carrying cost, your real net at closing, and where you want to be in 5 years. Those are your numbers. A national rate forecast can't see a single one of them. Want that read on your home? Reach out and I'll run your equity and your net proceeds with you, so your decision rests on your own math instead of a guess about rates. I'm Ray Stendall, Stendall Realty Group.